Excellent. We can start if we would like. Hello, everyone, and welcome to this webinar where we will be talking about AI and FinTech and what the UK's latest announcement means for the industry. I'm Amelia Martinez. I am Director of Ecosystem at Innovate Finance, the independent industry body for FinTech companies in the UK. And today I'm delighted to be joined by our outstanding speakers. Here with us, we have Hany, founder and CEO of Markaaz; Jeremy Goro, Head of Financial Services Strategy and Partnerships UK at Google; Imam Hoque, co-founder, and Chief Evangelist at Quantexa; Joshua Lloyd-Lyons, Vice President, Fidelity International Strategic Ventures; and our moderator, John Salmon, Partner, Global Regulatory at Hogan Lovells. Before we start, I would like to say that the duration of the webinar is going to be around 60 minutes. First, we're going to have the conversation with all speakers, and there's going to be some time in the end for some questions. So if you can send via the chat your questions, we're going to get to them in the end. And this webinar is being recorded for all of you to take that into account. Without further ado, I would like to thank you again for joining us. Thank to all of our speakers, and I would like to leave you now with in the expert hands of our moderator and speaker. So, John, if you would like to go ahead and start the conversation.
Great, thank you very much, Amelia, and welcome everybody. And thank you very much for taking your valuable time to attend this. Hopefully, we will make it a good use of your time. Delighted to kick off with hopefully an easy question. But in terms of just contextualizing this from your own perspective and your bit of the ecosystem and financial services, just asking each of the speakers in turn, how do you see AI transforming the financial services sector, and what do you see from your own perspective some of the key use cases that we'll see coming through? So I'll go in order of the screen. So Hany, if you would mind starting, please?
Sure, absolutely. So lovely to join you all today. At Markaaz, we've amassed the most complete and comprehensive directory of businesses on planet Earth. We are live in production with 549 million businesses, formal and informal, active and inactive across the globe. We've sourced that from 65,000 data sources. And for each business, we have around about 198 data elements per business, all amassed from the public domain. The most complete view, both regulatory, financial, beneficial owner, compliance information that's out there, and the cleanest information, evidenced by the fact that we typically achieve a verification rate of businesses somewhere north of 30 to 50% above all other players in the market. That's just a starting base for us, which means from a financial inclusion, which means from a accuracy of targeting customers, which means from a verification of customers, that has a massive economic impact for large enterprises and government. That's where we start. We also have a two-sided platform that allows us to, on a consent basis, engage the end user with the enterprise. So that immediately enables the request of non-public information on a self-sovereign and secure basis, where control of the non-public information is exclusively in the hands of the enterprise. But it means for the first time that both the enterprise and the end user get to see the same information. We today focus on business and business owners. We do not get into the direct consumer space as yet. That will come later. And for us, with AI, which we have been using for some time in our business, we use that to create intelligence in how we dedupe, match, scrub the data. We also use it to improve the algorithmic logic of financial institutions in terms of how they leverage data about prospects and about their customers. That takes two forms. One is it allows us to provide master data management services, and I use that word carefully because it has a different meaning in the market. It usually means data by the ton. That's not the case in our world. We actually take an intelligent view of the data sources that are being used and advise and recommend which data sources make the most sense for large enterprises. Think financial institutions, insurance companies, retail, and others. From a vast array of possible data sources, as well as which data elements and the non-public sphere that an enterprise should be asking consent to use with a user. That's part one. Part two, we then take that information and put it into a knowledge base where we use AI to test edge cases on the data. To bring that to life as an example, if a financial institution has small businesses that might be truck drivers, we will, and this is a glib example, this is not meant to be the full spectrum of what our AI is capable of, but what might happen to the predictive assessment of that business down the track, 3, 6, 12 months, depending on what trends might be going on. And for instance, the cost of fuel or the cost of lumber or whatever is relevant to that business. So that's sort of in a nutshell how we're leveraging AI to create enhancement on a very transparent basis for both enterprises, government, and end users. I'll pause there for now.
Thank you very much. That's very helpful. Imam?
Hi. So it's an interesting question because, of course, you have to start with what is your definition of AI. I did my master's in AI at Northwestern back in 1991. So back then it was a very different thing. And at Quantexa, I guess we've been working. So we have 30 of the 50 largest banks in the world as customers of ours. And we do all sorts of stuff with their data. So generally speaking, with all those large banks, they probably have loaded around anywhere between 20 and 50 billion records into our software running in their particular cloud environment. And they've been applying AI techniques, or we've been applying AI techniques for a long time. But obviously, there's now a revolution with the latest large language model-driven AI and all these other things. So historically, the sort of work we've done is joined data together, used external data such as that Han was describing, so corporate data with internal data, and build out connectivity, produce single views and build out connectivity of graphs of the banks or the financial institutions' customers, their counterparties, how they interact, their corporate structures, and so on and so forth. And then you apply models. So I use models in the traditional AI sense to optimize things like anti-money laundering detection, financial crimes, sanctions, KYC operations, probability of default and credit risk, next best offers in customer intelligence, and all those sorts of things. So that's been happening now for a long time in banks, generally more in the retail space, but now also within the corporate and the commercial space, because once you can represent your customers and their complex graphs and interactions, you can start applying the same techniques you used to apply on retail customers to business customers. Going forward, within a number of those banks, we have a slew of different, I would say, latest generative AI type projects. So let me give you some examples of what they look like. So one example is based on the backdrop of whatever it is, 20 to 60 billion records at the bank. You can apply models so that you can just ask questions of that data. So you can say, for my business customer, maybe you're banking quite a complex customer like Quantexa, where we are in pretty much 30 odd countries in the world. Where's their cost base? Where's the money moving? What are their subsidiaries? How large are they? So that you can then make decisions like, well, they've just received, a whole bunch of investment in US dollars. Their cost base is in the UK. Should we alert them on FX hedging, FX execution products, and so on and so forth? But it allows the relationship managers to now query that data using language and using simple things like spreadsheets, etc. So they no longer need to refer to their data analyst to prep the data for them. So that's one example. Another example, I think we're going to see a massive drop in the cost of the back office. So for instance, where you may have had 1,000 people doing AML, alert, triage, and whatever else you're doing with it, now we can use large language models to take those very complex graph diagrams of interactions and risks, if you're at level 3 review, and then just summarize them automatically as a SAR, and then someone just approves it and submits it. Now, clearly, you've still got a human in the loop. So all of these examples still have human in the loop, and it's really about these generative AI systems assisting them in what they're doing. Other things that people might look at is obviously credit risk optimization, deployment of capital adequacy, and how you can further optimize that, because all these models can do some very smart forecasting and those sorts of things. So I think the key here is once you've got your data all joined up, single views, customers, counterparties as single views, not multiple duplicates of the same counterparties, you can then start applying all of these really smart capabilities and bring it to the masses of the RMs by not having them have to delve into data or get people to write SQL queries for them or anything else like that. So those are the typical use cases that we're seeing right now with some of the banks we're working with.
Great, thank you very much. Jeremy.
Yeah, definitely. Thanks. And thank you for everyone for joining and for being on the call. I think it's first just maybe take a step back and just realize how AI has truly catalyzed a wave of rapid innovation. And clearly the pace shows no signs of slowing. Its evolving capabilities will continue to drive a radical transformation across all financial services and the way in which they operate, compete, and also innovate. At Google, we've been an AI-first company for almost a decade by now, and today AI is used in our consumer and enterprise products by billions of people globally. Our journey in AI actually started back in machine learning in 2001 when we first incorporated machine learning into Google Search to better suggest spellings for people searching the web. And we continue to help organizations across industries, geographies, and of all shapes and sizes build transformative AI and Gen AI experiences with confidence and speed. So we bring our comprehensive AI stack backed by the decade of research, and we're really empowering customers to access and customize leading foundation models, build and deploy Gen AI applications with an integrated developer platform, boost productivity with AI agents, and develop their own models using Google's cutting-edge AI hypercomputer infrastructure. About 18 months or so ago, financial services firms and fintechs around the world were hearing about how Gen AI was going to disrupt their businesses overnight. And we definitely see this change happening quite quickly by historical standards, but we are seeing that it's taking longer to move from proof of concepts into production. And I think the benefit that we have in financial services is that we've always been a very data-rich industry. However, we've been quite insights poor. And so Gen AI has the potential to really maximize the value and benefit and reward of this data, which we think and what we see with our partners and customers globally leads to greater personalization, fraud prevention, risk mitigation, servicing, and other data-intensive functions. And some of the exciting use cases that we see really truly span the fintech and financial services value chain. So whether it be in customer service, sales and marketing, individual productivity, developer and engineer productivity, back office processes, like Imam mentioned as well, enhanced customer experiences, and also leveraging AI to create new products, propositions, and services, which is very much aligned to the proposition of many fintechs. And some specific examples that we see include developers using Gen AI to convert complex financial models to code, helping financial researchers analyze multimodal data, as well as leveraging AI to combat money laundering. And I think one great example of the latter is our Google Cloud teams working really closely with HSBC to launch Google Cloud's AML AI to more effectively detect suspicious activity across financial transactions, to more effectively detect suspicious activity, which again has reduced significantly the number of false positives and results in many efficiency gains. And when we look at 2025, we think it'll be another pivotal year in enterprise AI adoption and financial services, and really excited to see what other new use cases come to life and fruition.
Brilliant. Thanks, Jeremy. Joshua.
Sure. So at Fidelity, we're in the business of wealth and asset management. So I'm very much looking at the market from that vantage point. Specifically, Fidelity Ventures invests into fintech startups that are strategic for Fidelity, generally at sort of Series A through C on a fairly global basis. So it puts me in quite an interesting position where we're sort of bridging between sort of an institution that's undergoing rapid innovation and also sort of rapidly evolving sort of a startup ecosystem. I think regarding the transformative impact of AI, it's important to note that we're sort of incredibly early in this sort of speculative technology wave. And given sort of the blistering speed of investment innovation, the future is really quite uncertain in general and in sort of financial services in particular. To give, I think, the audience sort of just a few nuggets around sort of the speed of that innovation, the amount of capital that's being deployed, excluding the Stargate initiative that was recently announced, the hyperscalers alone were looking to invest more in 2025 in cloud capex than the cumulative cost of the entire Apollo space program. So something in the range of sort of $250 billion. Sort of drilling down into financial services, I think there's one quite interesting Morgan Stanley estimate that about 27% of jobs in financial services sort of could be impacted immediately, with that rising over the next few years to sort of around 50% of jobs. So the money is being invested. There are a huge number of highly talented people sort of really working in that direction, and the impact is going to be sort of extremely large. That said, I think my thesis on the space as a whole is that the impact is probably massively overstated over the next 5 years and quite significantly understated over the sort of next sort of 10 plus years. I think there are a number of idiosyncrasies that make sort of financial services maybe a little bit slower to adopt than some industries, at least in a number of areas and a number of different business units. And I think that's really because, while the technology is advancing at sort of a geometric rate, sort of human institutions and societies very much are not. I think, happy to go into a little bit more detail later in the panel, but I think sort of regulation, risk tolerance, and sort of legacy system challenges are some of the big impediments. Fundamentally, if as a large bank, for example, if you don't have your data in sort of in single versions of truth, extremely high quality data, it's incredibly hard to leverage the technology in a safe, responsible, and efficacious manner. Fundamentally, it is the whole garbage in, garbage out dilemma. To double click on a few use cases, I think that we're seeing that are really, really high impact across the ecosystem. I mean, fundamentally, LLMs are particularly good at dealing with unstructured text, unstructured data. Therefore, I think some of the best use cases we're seeing, I think as Jeremy alluded to, things like code generation are extremely powerful, improving developer productivity by very, very large margins. Customer success, sales enablement, things like that, I think we're seeing quite a lot of pickup. Obviously, in a regulated industry, there are complexities. One example that was all over the press, I think, towards the end of last year was Klarna. That's a particularly good example. So leveraging sort of Gen AI to sort of create customer service chatbots available 24/7, don't get tired, et cetera, et cetera. I think they were estimating that tech is doing the work of 700 sort of full-time customer success agents at the moment. And so I think tier one customer support with sort of non-complex cases and for triage, I think they're very coherent use cases there. A few other companies that we've sort of interacted with, I think, particularly interesting. One called Norm AI, effectively creating compliance analysts. So, if you have something like a piece of pre-investment due diligence, you might have to sort of go query a series of databases, understand, are there sanctions implications? Are there adverse media around this entity or this individual? This platform can effectively do all of that work, the work of sort of a human analyst. You might take them half a day. It can do it in seconds or minutes. Another interesting one is around investment research. So tasks that involve sort of large aggregation of information and sort of analysis of that information. Companies like Finster and Hebbia, I think are particularly interesting in that space. So those are a few of the things that we're seeing from our vantage point.
That's very helpful. Thank you. So yeah, I mean, totally agree. I think I think just about everyone in the panel has mentioned data and the challenge of data, and you can obviously see if we don't have the data, then that's going to be a challenge. So in terms of the topic of the day, which is the AI Opportunities Action Plan, it'd be great to get the panel's view on your initial view, particularly how you see it impacting or supporting the international competitiveness of the UK as a place for business, particularly given how important financial services is to the UK, and also address any gaps that you would see in terms of the action plan that we can, hopefully persuade the government to take on. So, Imam, should we start with you? Do you want to have a go at that question, please?
Sure. Obviously, we watch it very closely because Quantexa, as well as sourcing out all this data for all these big banks, we do the same for many government departments. In the UK, that'll be HMRC, it'll be the agencies and all sorts of border people. Right. So What the UK is doing with that, there's sort of three elements to it. There's a big infrastructure play, which is we're going to put all this infrastructure in place. To be honest, I think that's going to be more niche specialist things. They could be, pharmaceutical beneficiaries. It's definitely going to be quite academic. And will it really impact what's going on in the financial services sector? Not quite so sure, because probably we won't have access to those sorts of facilities, nor would we actually need to. The other thing they're doing is they're obviously talking a lot about how regulation works. The reality is, though, you can change the regulation in your country, maybe access to training data, whatever else it may be, that helps you develop interesting IP. But if you're like us, truly global company operating from Japan to Canada to Australia and the Middle East and everywhere else, you've got to go by the regulation in those countries when you deploy. So the regulation element of it is not quite as maybe people think, because we still have to deploy into the EU, and so on and so forth. So that's quite key. Government eating its own dog food is a really important thing, I think, because everyone interacts with government services from local councils to whatever it is. And if you become very familiar with the use of these types of generative AI and new techniques, then it becomes a little bit more, day to day for you, and you start thinking about it in your own workplace, including financial services. So I think that's pretty key. And obviously, it'll build up a skill base in the UK. So all of these things, ultimately, I've done many software companies and whatnot through the past. It's all about the people and the skills and the quality of those skills. And we have a slight unfair advantage in the UK. Natural language is English, which is a great starting place. And also in the UK, we have a strong diversity of businesses which are world-class, particularly financial services. So we should leverage that because we are dealing day to day with the compliance issues and all these other things. So I think it's a good initiative. Is it going to be massively game-changing for the financial services industry? I don't think we'll notice a big difference. But nevertheless, I think it's pretty key. How they regulate FS, obviously, is going to be quite important because we will want to be able to create examples in the UK of quotes unquote practice market leading, world-class use of AI in our financial services. So that's my summary, I think, of the position.
Thanks, Imam. Jeremy?
Yeah, I think it's a great question, and some similar thoughts along those lines as well. I think we have to realize that the UK is the third largest AI market in the world, and the UK has such a rich tradition of science and technology leadership and home to world-leading AI research institutes. So we have such great talent and a culture of innovation in the AI and science space here in the UK. And that strong academic and R&D leadership has meant that trailblazing AI companies like Google DeepMind continue to grow and thrive here. And so AI's transformational potential means that we're at an early but critical juncture of policymaking. AI-powered innovation can create over £400 billion in economic value for the UK by 2030. It can deliver enormous productivity gains across all sectors of our economy. It can really help to solve pressing societal issues and advance progress in fundamental sciences. But these benefits will not come automatically, right? And so to realize AI's full potential, a comprehensive AI opportunity agenda, which prioritizes investment and infrastructure, digital skills, and universal access, it will be required. And so this is why we welcome the focus of the AI Opportunities Action Plan to adapt a more proactive policy agenda for AI that will unlock long-term economic growth, boost productivity and competitiveness, and so much more. And so the plan's calls for infrastructure investment, the promotion of widespread adoption and universal accessibility. It maintains a pro-innovative or pro-innovation regulatory framework to support a healthy AI ecosystem. I think similar to what Imam mentioned, it also accelerates a public sector adoption of AI, some more dog fooding, which is critically important. And we find the position and the calls around AI skills and the workforce strategy quite thoughtful and deeply encouraging. So I would say overall, the plan, I think, is quite thoughtful, quite intentional. Will there be overnight benefits, particularly in financial services? I think to be seen, to be determined. I think there's also an onus on all of us in industry to best align our growth ambitions, the way in which we work and operate and regulate, to align to to the plan. But overall, a great, thoughtful plan and very intentional in its call for change and strategy. So kudos to the team in putting quite a few different principles and objectives together to drive this work.
Great, thanks, Jeremy. Joshua.
Sure. So just echoing, I think, a few of the thoughts there. I think it's very, very positive that the government appreciates the opportunity within AI and it sort of is moving in some fashion to support it. I think government plays sort of a really significant role in influencing market sentiment, and the show of support for the industry and all the various participants is incredibly positive. I think I would, in terms of the overall impact over time, I would probably slightly reserve judgment until the plan is translated into sort of more detailed, tangible policy.
Yeah.
That said, sort of from the action plan itself, I mean, I think, taking a few of the aspects in turn, I mean, I think increasing sort of the amount of compute in the UK and reducing the barriers to sort of building more is probably a net positive. I think I would agree with Imam that I'm slightly unsure how it moves the needle for financial services, but probably a net benefit as a whole. Now, whether that compute ends up being used for sort of pre-training or for inference is a little bit of an open question, but it will probably get used in some capacity. And we could definitely do with more of that infrastructure. I think aspects like a public data bank, which I believe was a Labour manifesto promise actually, but sort of translated into a bit of a new form with this action plan, I think is particularly interesting. While not my area, I think some of the opportunity for biotech, given the data we have within the NHS, provided that can be leveraged in a safe and responsible fashion, I think that the potential there is really, really significant. The UK has a fantastic pedigree in biotech. We have some great biotech entrepreneurs, some great biotech funds, and more established companies. I think the potential there is really, really interesting. I think it would have been nice to see maybe a little bit more detailed clarity around ongoing regulatory posture out of the government, although I'm sure that will be forthcoming over time. Yeah. I think assuring that there isn't sort of overly onerous legislation that sort of stifles growth is particularly important from our vantage point. Thinking about sort of the startup ecosystem, the EU AI Act, I think, has had some challenges for companies in the market. I think it's created a reasonably large burden, and some of the sort of particular stipulations are fairly onerous, and the penalties particularly extreme, and that's led to sort of slower times to market, company products not being shipped into the European market. I think it's fantastic that we haven't gone down that route as a country thus far, and it would be great to sort of see some more detail on that front. I think there's also quite a lot that's sort of required beyond the plan that's worth touching on. So sort of a level of international collaboration around sort of standards and alignment around what a common sense approach looks like, I think is going to be key, given sort of the global arms race that sort of some speakers mentioned earlier. I think, there's just a few of the other things that are needed. I mean, greater amount of private capital sort of into the ecosystem. I mean, the funding environment in the US couldn't be hotter at the moment. From a valuation perspective, from just a volume of funding perspective, it's an interesting time to be an investor in the market. So we definitely need sort of to do more to promote greater investment into the UK. Talent is a key aspect that is touched on the plan, and I think it's worth double clicking on. I think when we talk to companies in the space in terms of some of our own portfolio, some of the biggest barriers to growth is high quality AI talent. I think we're incredibly fortunate that DeepMind chose to stay in the UK, particularly after the acquisition with Google. Some interesting dynamics there because it's created an amazing sort of hotbed of talent, and the number of companies that are coming out as sort of DeepMind alumni are fantastic. I think one I mentioned earlier was Finsta. I think the ambition here has to be to create sort of a thriving ecosystem across sort of both public and private sort of landscapes. And I think the action plan is a very good first step, and I'm excited to see sort of what comes next from the government.
Great, thank you, Hany.
I think there's a lot that's very rich that's been already said. I want to amplify and double click on 2 points. One is globality and positioning the UK as not only a gateway but a hub. As opposed to taking a very domestic-oriented policy perspective on AI. The companies here today are global by design, and not only have to respect legislation, but also have choices in terms of where they domicile activity and where they position certain activities. For us, we are entirely global, but heavily Anglo-American in terms of our talent and in terms of our domicile. But I think the government's taking more of an audacious perspective around the UK playing a hub posture relative to other markets is going to be key. So I think that's one thing. And I think the second thing really is in terms of while the UK government has been zealous about consumer protectionism, I think there's an important perspective here around consumer and market education and engagement around AI. And I think it's very important that the use cases that are supported have a clear and direct positive impact that can be seen in the market. And the government's leaning in with that. Yes, using it for government services. Yes, demonstrating what that efficiency looks like. Yes, supporting the investment case, which, as Joshua said, is still not quite where it needs to be in the UK relative to other markets, is important. But I think the government doing more to encourage inbound investment and a higher level of domestic investment in this arena is going to be really key.
Great, thank you. So, I'd be keen to go on to some of the barriers on adoption of AI, and in particular challenges and risks on generative AI and in financial services. And for fintechs, we've talked about data, and we've talked about data quality and access to data, and we've talked about regulation and the challenge, obviously, of a global business, which everybody I think on this call is suggesting as a challenge. But where the UK's position on this is. So, Jeremy, starting with you, what do you see as the barriers and some of the challenges?
Yeah, so I think as more people use AI, attitudes and perceptions towards the technology continue to change. So unsurprisingly, with increased usage comes greater excitement about the opportunity that AI presents, and AI's ability to power economic growth, deliver better and more personalized and efficient services, and help businesses of all sizes and across all industries innovate, grow, and help people live healthier and better lives. But absolutely, barriers to entry still exist, and quite a few reasons for that. I think we've covered some of those, and I think some of those are also essentially highlighted and some mitigations around those in the opportunity plan. But a lack of AI skills and talent, the intersection of AI and regulatory uncertainty, particularly for global firms, which we mentioned a few times already. I think some industries, such as financial services, has more of a natural or organic aversion to risk, perhaps in other industries. There's still quite a bit of a lack of C-level support in terms of adopting and sort of testing and playing around with AI. And even those organizations that are potentially starting, there's some uncertainty of how and where to start, how to streamline and how to operationalize AI implementation, as well as governance and cybersecurity. And I do want to sort of double down and go a little bit deeper on the cybersecurity space, because in many ways in cybersecurity, AI is poised to transform digital defense. It can empower defenders and really enhance our collective security. But at the same time, though, let's be quite honest that some of these AI capabilities are also available to attackers, leading to understandable anxieties around the potential for AI to be misused for malicious purposes. And so really we need to see private sector, governments, educational institutions, and other stakeholders. We have to work together to not only maximize AI's benefits, but also reduce the risks of abuse. And at Google, we're quite committed to developing responsible AI guided by our principles. And we're very, very intentional in sharing our resources and best practices to enable responsible AI development across the industry. And so we also share our findings with the security community to raise awareness and really to enable stronger protections for all and encourage other developers to do the same. So really quite a few different barriers to entry. And again, I think it takes collective action from private sector, from governments, from various stakeholders to really come together to, on one hand, truly maximize a pro-innovative approach to see the benefits, but also to reduce the risks of those abuse and to really reduce the barriers of entry as well.
Yeah, absolutely. And I've heard that. I've heard that concern, right? That the attackers can use AI just as the defenders can as well. So you've kind of got a potential for a lot of difficult issues there. Very helpful, Joshua.
Sure. So I think probably everyone's pretty familiar with a bunch of these sort of the technological risks that are involved. Some sort of hallucination, auditability, sort of data loss and cybersecurity, as Jeremy was mentioning. Also, just about at its core, the technology, the LLMs today are sort of non-deterministic, which makes sort of ensuring the sort of the quality and consistency of outputs is naturally quite tricky. Layering on things like sort of copyright issues, there is a broad landscape that that firms are having to navigate. Yep. I think maybe going into detail on one area that I think is particularly interesting within financial services. So I refer to financial services having a self-driving car problem. And sort of what I mean by that is, self-driving cars have been in the works for sort of 15 plus years and are really only sort of now coming to maturity, despite having a pretty firm technological foundation sort of as far back as 2009. This relates to part of it. It's just the nature of driving. There's a very, very low error tolerance. I mean, if you crash, that's a pretty big deal. And a very large problem space. Like every time you drive down a street, it's going to be a different situation. There's going to be there's going to be different actors, etc., etc. And it's proven exponentially sort of more difficult than we would have expected to get from working 80% of the time to tending to 100% of the time. I think there's sort of at a certain level of abstraction, sort of quite a strong parallel with financial services here, in that we're dealing with people's financial livelihoods, and sort of, both us as Fidelity, but also our financial regulators really do understand the gravity of that. And the overall tolerance for error is exceptionally low. So while many solutions that we're seeing in the market and that are demoing very, very well are getting to that 80% threshold, they're really, really struggling with that final 20%. Of efficacy or error reduction. And I think sort of when it comes to financial services software particularly, I think that mastering that last 20% is where a lot of the really great businesses are being built today. To give a tangible example, if you're an investment research analyst and your research assistant hallucinates the last quarter earnings, that could have absolutely massive implications sort of downstream. So I think that comes down to the point of, what then is the right use case against that context? There definitely are some use cases with humans in the loop looking at sort of, internal use cases often that I think that are gaining traction. I think when it comes to sort of customer facing applications, that's when it gets a lot trickier, and the technology needs to reach sort of a reasonable commensurate level of maturity before it really reaches mass adoption.
Yeah, it's interesting, actually. I'd never thought about it. I guess you can have a human in the loop in lots of financial service transactions. A bit more difficult in a self-driving car, right? But yeah, it's a very helpful analogy in terms of the tolerances point. Imam.
I'm going to be maybe a little controversial. I think adoption is going to be quite fast, and it's going to be driven not necessarily by all these massive mega model things that are going on, because I think the massive mega model things are rapidly commoditizing. Everything goes faster in the modern world than it used to. In the olden days, I remember financial institutions writing their own operating systems, and then they stopped doing that, but they were writing their own specialist databases, then they stopped doing that. And in the end, you just pick up stuff that's there. So these large language models are pretty much now, I would say, commodity available at a very high value to deploy yourselves. So I think historically, if I look at the way financial institutions have adopted innovation and things like that, it's really come down to the software providers for the verticalized solutions that they use. So all the big banks we work with, I'm not concerned about, is AI in the loop making decisions around sanctions, financial crime, fraud, next best offers, etc. It's fine, because it's a game of statistics. Even humans don't get it right every time. Yep. I can tell you now that our relationship manager never suggested to us an FX hedge when we got all our money in the US. I could have gone back to him and said, "You're our bank. You should have told us about that. We could have lost a lot of money." But the models assist the humans, and the humans make the decisions. So I think we'll see very rapid uptake in the back office and /RM facing side into financial institutions. And that'll be driven by companies like Quantexa and others who will just take those commodity models and we will just literally locally deploy them, because that's the barrier to entry for many banks. They don't like sending their data out to, somewhere else, so they don't know it's going, and then getting an answer back and they don't know who's interfered with it. Today, you can just literally locally deploy, the cost point has come down, and you can make many, many, many decisions far better and easier and support those people in their jobs. So I think adoption is actually going to go quite fast, just as it has in all the spaces that we've interacted in all those large banks. The point about data is critical. If you try and do this on poor data, you're going to get poor results. So typically, the first step, which any of these large banks who engage with us, like for instance HSBC or others, is to get their data in order. They've got many billions of records, get it all connected up, produce a single view, mix and match it with the external data so that you've got it enhanced with third-party data, and then you can start making the proper decisions. But I think we'll see a whole slew of vendors just picking up all of these models and creating versions of applicability for what they've always done, whether they're a vendor in the credit risk space or a vendor in customer intelligence space. They will have a large language model powered, Gen AI powered element to their offering. And that's how you'll see it happening. And that will help with the skills base issue. Clearly, banks will have their own central precious IP where they get their competitive advantage, and they will have teams also working with these technologies, seeing how they can help them. But that would be my prediction of how the uptake would go fairly rapidly.
Okay, very helpful. Thank you. Hany.
I want to amplify 2 points. One is around the fear of job loss in organizations as structural inefficiencies take hold. And we often see, in our environment, the need for top of house endorsement support for any innovation to go on in organizations. There's a natural inertia that exists in many functions in these organizations, particularly where you've had staid or very manual processes that have been in place for a long time. And I think that requires some attention and thought. And I think the second one that we've not really talked about today is the engagement of the end user or the counterparty in the process. So I'll bring that to life in a couple of examples. Most small businesses, and even some larger ones that we've spoken to over the years, have no clue the extent of information that's out there about them. A Google search, and no disrespect, Jeremy, Google's, capacities go far beyond this, but a Google search is not always going to tell a business what all the public data that's out there about them is or how it's being used. It'll surface it. And it's where most businesses actually go in the first instance, which, is a positive thing. But it's not going to surface how that data is being viewed and how it's being used. And so creating end user engagement, particularly in this environment with AI, is going to be key. And developing and understanding an engagement model for individual consumers and businesses about how their data is being seen, how it's being thought about, is going to be, in my opinion and in our opinion, just absolutely critical as we go forward in this space. And I think that's going to be one of the major drivers of adoption in the market.
Great. Okay. So I'm just going to go on to our next question. Just before I do, I mean, we've got a fantastic panel here. We've got lots of people on the call I can see. So, if you do have questions, please put them in the Q&A and we can try and get some answers for you. But just turning to my next question. So we've talked about regulation. We've talked about the kind of challenge of nation state or EU versus the kind of global nature of everyone's businesses. But in terms of from the UK perspective, because that's what we're talking about today, what do you see as the role in policy and regulation playing in terms of shaping the AI landscape? And in particular, the challenge that we always have in digital financial services, FinTech, which I've been doing for longer than I care to remember, is and people have said it, it's a risk averse industry. Regulation's key, and we've obviously got the horizontal. People mentioned the EU AI Act. So we've got the horizontal regulation that the UK, looks likely to bring something in, and they've got the vertical sort of PRA, FCA type financial services sector specific guidance or rules that again, I'm sure over time will evolve. And that constant sort of tension and challenge between regulation and supporting innovation and growth, but also, you know, protecting the consumer. And, you know, Hany's been making some great points about how important that is as well. So I mean, just starting with you, Joshua, what's your take on how we do this and how do we get the right balance? Other than it being impossible, obviously, but that's probably not a very good answer.
I mean, I think the UK, sort of under both the previous and the current government, has sort of taken a fairly prudent stance of maybe sort of being somewhere between the EU and the US, if not going maybe as far as the EU in terms of, you know, heavy prescriptive regulation, but also sort of seeking to, you know, create frameworks going forwards to sort of prevent sort of end customer harm. I mean, I think thinking about the regulation space more broadly, critics of sort of current waves of regulation would say that regulators are working hard to regulate an industry that doesn't yet exist, given how sort of nascent and uncertain the space is. And I think there's probably a level of truth to that. While there are clearly very, very real risks, I mean, we've all seen sort of the massive increases in sort of fraud, spear phishing attacks, etc., sort of fueled by underlying LLMs. And you know, there is a very important role for government in actually ameliorating those threats and protecting the public. I think there, you know, that some of the regulation that sort of that some are advocating for, you know, has potentially quite harmful impact. And I think maybe touch on two different areas. One, which is very close to home for me, is that regulation has incredible capacity to harm startups. So whereas, you know, some of the larger hyperscalers, you know, have very large sort of legal teams that have huge amounts of resources with which they can sort of work to understand, implement, and sort of, you know, ensure compliance with that regulation. It's often much, much harder if you've got a startup of sort of 12 people, you know, at seed stage or something that's trying to navigate a highly, highly complex environment like the EU. It definitely doesn't foster innovation. And I think I would argue that resource differential between the very large players and the very small actually could lead to the, you know, to more pervasive sort of oligopolistic market dynamics. I don't think really anyone's looking for here. I think the one key point I would touch on, obviously not having a background in regulation, would be that I think the common sense approach would be to regulate the usage of AI rather than the development of AI. So, you know, focusing less on the development of the underlying models and more in terms of how those models are being used and the customer outcomes that are coming out of that feels like a fairly sensible path forward from my vantage point. You know, we don't regulate the sale of computers, but we do prosecute sort of hackers and fraudsters who use them to nefarious ends. And I think it probably makes sense to employ the same logic here when developing sort of regulatory frameworks. The other point I would touch on, which I think some early speakers have alluded to, is that we are currently in an arms race. And I think, you know, we can definitely draw an analogy with sort of the space race, you know, during the Cold War. You know, we have geostrategic adversaries, you know, who are looking to develop this technology, who are investing huge amounts in the development of this technology. And it is definitely going to be developed. The genie is out of the lamp. It's going to be extremely hard to stop its proliferation. And I think there are very, very significant implications of halting innovation and halting its overall development. I think it's pretty imperative that we remain globally competitive and keep a sort of fairly light touch approach to regulation going forward, as we have done historically. And I think, you know, a lot of credit to be given to the government for not jumping the gun, given quite a lot of public fear and public pressure to step in.
Yeah, and that's very helpful, Joshua. And I totally agree with your point about regulating the use of the technology and the technology itself. But the reality, if you look at things like the DORA and the new UK, you know, CTP regime that's going to come in for financial services, we are regulating now tech providers, you know, and that is becoming quite a pervasive element of this, particularly around financial services, which I fundamentally disagree with, but no one listens to me, right? Imam.
I think we're in uncharted waters, frankly, because if you look at the broader geopolitical environment, you know, you're dealing with the questions of deglobalization or not. Do we all shuffle along with similar regulation? Yes, there has to be regulation to protect your own financial systems within your country and your own people, but broadly we're operating this global thing. The challenge I think we have with this is historically when we had these quotes unquote arms races, you would come to some agreement. So the nuclear deproliferation agreements, but you can monitor and watch that. You've got things at airports. You can take, satellite photography. You can see whether people are breaking the rules. Unfortunately, in this world of AI, it is impossible. So even if you agree amongst yourselves, you're not going to do something or you are going to do something, there's no way of monitoring it today. And that makes for a very complex dynamic of, are we going to protect our people, our citizens, or are we going to cripple ourselves economically? Or are our citizens going to be disappointed we don't have access to things? I mean, well, let's see how the TikTok thing plays out in the US. It's not clearly an AI thing, but it's a related sort of problem space.
Yep.
So I think the use of AI as a topic and regulation is really hard. I think financial institutions do need to worry about the quality of the sustainability of our financial system. I'll give you an example. If we look forward in the future, I can imagine a scenario where banks will use AIs to create highly customized, structured products for businesses in every different financial situation they may be in. It's not just like, oh, I'm going to take a factoring product or an invoice discounting, or I'm going to, use this instrument. They'll become highly, highly targeted because they can be. Question is, how do you then monitor all of that so you don't end up overexposing yourself to a single set of risks? So that is about monitoring and regulating the stability of our own financial system, because a meltdown there is a problem. But the AI thing, I think, is a much, much tougher topic. And this whole globalization, deglobalization, there are countries in the world who are actively ensuring they're not beholden to MasterCard and Visa for their financial transactions. Because if someone chooses to flip that switch, the country stops. So countries are building different payment gateways. There's all sorts of interesting stuff going on out there because of this question of globalization, deglobalization, and geopolitics. So a tough one, I'm afraid.
Yeah, thanks, Hany.
I think a lot of this has been covered, but this is a tricky area, and I think in the fintech world, there is a pervasive perspective of not wanting to be first. Even some of the most progressive and largest organizations in the world not wanting to go first, and so we have this sideline mentality of waiting to see what happens, and I think that's going to be a challenge in this space. I think regulation that's focused on outcomes as opposed to development and innovation is going to be key. I think engagement, and I've said this a few times, engagement of the end user in the process and what's being done, and showing positive success cases and positive use cases and positive impact. I mean, there are things that we can measure. I agree with Imam's point about it's nearly impossible to monitor the development and nearly impossible to really look at, what's being done sort of behind the scenes. But I do think that engagement of the end user and showing positive outcomes, for instance, the example that Imam gave about highly customized products, that we're seeing as a positive thing in the market. That's a good thing. But it must go hand in hand with the engagement of the user in terms of showing positive outcome. The silliest example, if we can improve financial inclusion by any percentage, that's a positive thing. And shining a light on that is a very positive thing. If we can provide better access or more accurate risk assessment that results in lower fees or lower rates or larger lines, that's a positive thing. We have a phenomenon going on in the UK that isn't being talked about much at the moment. This phenomenon of debanking, where a customer will go along to its high street bank and say, great news, I've just won a piece of business in Saudi Arabia. And the honest answer that happens is, great, go bank somewhere else. And these are real things that are going on. The assessment is, 40% of small businesses debanking because they can't get access to services because of a low or below zero tolerance of risk in organizations. So I think shining a light on some of these use cases that have a positive impact is going to be key. We're certainly focused in that area. And I will tell you, there are very few organizations that are actually equipped or capable of impacting some of these really fundamental things. There's a lot of niche players, there's a lot of innovative tools, there's a lot of very clever companies, to Joshua's point, that are addressing the last mile or that last 20%, but stitching them together in a comprehensive and cohesive way in these large regulated industries like financial services is actually really hard. And by design, they're typically built to be a silo as opposed to be an integrative technology. That's where I think organizations like Quantexa and Google and others that are helping that integration layer are really, really key. So you have big players, yes, and you have smaller players, but the integration process and making sense of that and then showing a positive impact in the market is key. And I think regulation that's thoughtful about that is going to be a good thing.
Great, thank you. Jeremy.
Sure. So I think before giving or sort of opining on the role of policy and regulation in developing the AI landscape here in the UK, I think it's just important to ground us all. And it's probably one of the biggest takeaways from the last 55 minutes or so is that AI is the most profound technology that humanity is working on today. It will touch every industry and aspect of life. And given these incredibly high stakes, AI is too important not to regulate and too important not to regulate well. And so AI needs to be regulated in a way that balances innovation and potential harms. And we really need to have policy conditions in place that allows AI to be built. And so we talked about investments in R&D and infrastructure, cloud infrastructure, compute capacity, data. I think we covered some of the pro-innovation strategies that we can champion to spur dynamism, to enable researchers to really convert ideas into new products. Obviously, we're talking about policy now and how policy really must be tethered to strong trade and to investment, and how we really need new types of AI alliances supporting international collaboration, cross-border data flows, which obviously are essential to development and deployment of AI. The UK's existing sector-specific approach to AI regulation for products and services, which obviously empowers regulators to use their domain-specific expertise, is quite a helpful global footprint and blueprint. And we would encourage the UK to continue down this path. And we really think that the UK has quite the opportunity to differentiate itself from the EU and to truly accelerate and not hinder innovation, growth, and societal benefit. So any new binding rules for frontier AI labs and innovation should be considered carefully so they don't risk the losing of investment and talent. Progressing innovation requires intervention at the points of actual harm, not blanket research inhibitors. And so furthermore, given, and we talked about the global nature and the international nature of these conversations and of policy and regulation, regulation should truly reflect national approaches, but also try to align with international standards wherever possible. And so the UK, the US, and the EU, we're strategic allies and partners. We have shared values and goals. And so it's critically important that we work together to create robust pro-innovation frameworks for this emerging technology based on those facts. So a lot for us to think about, but some early good learnings and policy opportunities to drive favorable regulatory positions here in the UK.
Great, thank you. We haven't had any questions in the chat, and we've got 2 minutes, so I'm just going to go around the panel very quickly and just ask you to, in one sentence, and I appreciate this is a horrible challenge, what do you see the impact that AI is going to have on fintechs in the next 5 to 10 years? Joshua, let's start with you. It's going to help me get the mute button off.
Yep, there we are. Sorry. Yes, that is a horrible question. I mean, I think I come back to fundamentally transformative within 10 years. Shallow implementation in 5 for financial services.
Great, thank you. Imam?
I would say cast the clock back 20 years and look at branch infrastructure. Look at where branch infrastructure is now. Yeah. And by the way, AI and tech and all this stuff goes faster and faster and faster and faster. So I think we're going to see a drastic shrinking of the number of heads working in FS with the same product output and value, or much better products with those people.
Great, thank you. Hany?
The conversion of spare capacity into new equity and the equitable distribution of that is going to be a big topic that has to be worked through, whether that's what to do with the displaced employees or the savings that are made in consumer and business lives, and how that's distributed effectively and equitably is going to be a big topic.
Okay, thank you. Jeremy.
Well, it's incredibly hard to predict even tomorrow, what tomorrow looks like in the age of AI, right? So given just the wave of rapid innovation, I would say I'm maybe a bit more optimistic than my co-panelists here. I truly believe not only in the science field, the health field, but I do believe that AI will create new subsectors, new fields of study and research, and essentially new wave of fintech. So I'm optimistic we'll see AI powering a whole new bench of fintechs, and also the continued progress and success of those early adopters of AI within the fintech ecosystem. So pretty excited to see what happens tomorrow and then 5 and 10 years.
Great. Okay. Well, given the time, it just falls on me to thank you very much for everyone attending, and thanks very much to those that are on listening, and thanks Amelia for bringing us all together. Thank you.
Thank you everyone, John, Jeremy, Imam, Hany, Joshua. It was extremely insightful. So thank you so very much for joining us, and thank you for all our attendees for staying with us. If you want to learn more about the events like this that we're going to be hosting, please visit innovatefinance.com. There's an event section with all the activity, and we're going to have on the 29th of April, IFGS Innovate Finance Global Summit at the Guildhall. So we look forward to seeing you all there. Thank you so very much, and we keep in touch. Thank you for joining.
Thank you. Take care.
Thank you.
Bye.
Thank you so much.